Have you ever just stopped and thought about this? We spend, what, 12, maybe more years in school?
Yeah, a huge chunk of our lives.
Right. And yet, how many hours, actual hours, do we spend learning about something as basic, as fundamental as money?
Almost none, usually. It's kind of shocking when you put it like that.
It really is. It's this feeling, I think a lot of us have it, like you just missed out on some crucial lessons about personal finance.
Yeah.
Like, where was that class?
Actually, the secret handbook we never got.
Precisely. Well, today we're doing a deep dive into something really intriguing. It's based on insights of a source called Financial Illiteracy, the Systems Design.
Mm-hmm.
And it puts forward this, well, pretty provocative idea that this widespread lack of financial know-how, it isn't just an oversight.
Right.
It might actually be, deliberate.
Yeah.
Part of how the whole system is set up.
And that's what makes it so fascinating, right? Because it flips the script. Usually we think, oh, I should know this, or maybe school should teach this better.
Yeah, individual failing or curriculum gap.
Exactly. But this source suggests, no, hold on, maybe it's more structural. Maybe there's a design behind it. It really makes you stop and reconsider things.
It definitely does.
Yeah.
So, okay, our mission for this deep dive is to really unpack that idea. We want to dig into why this might be the case. Who, according to the source, actually benefits if most people don't understand money well?
Yeah. Who gains from this?
And, most importantly, what concrete steps can you, listening right now, actually take, like starting today, to navigate this whole thing more effectively?
Practical takeaways.
Absolutely. Get ready for, hopefully, some real aha moments here. It could shift how you see things.
Definitely.
Okay, let's dive straight in. The source points to these, let's call them unlearned lessons, 5 specific areas of finance that most people, well, they just never really get taught, even after all that schooling.
Yeah, the big gaps.
First one, and this really hits home for me personally, is simply how to save or manage money.
Just the basic.
Yeah, but it's more than just spend less than you earn. It's about, cash flow, building that emergency cushion, really telling the difference between what you need and what you just want.
And these aren't just common sense things you pick up. They're actual skills that are rarely taught systematically.
Exactly. We get told to save, but not really how to do it effectively or how to manage the whole picture.
Which leads right into the second point the source makes. How to invest.
Investing. Yeah.
So many people see it as this, complicated thing only rich people do.
Right. Like you need a broker and a fancy suit.
Or a ton of money to even start. Instead of seeing it for what it is, a fundamental way to actually grow your money over time.
Which naturally connects to the third unlearned lesson, how to build wealth. And this isn't just about having a high-paying job, right? It's about accumulating assets, things that actually make money for you, creating that long-term security.
Exactly. Earning is one thing, building wealth is another game entirely. And the fourth area is just as critical, maybe even more so day to day.
Yeah.
How credit actually works.
Oh, definitely. Credit scores, interest rates.
It's way more than just borrowing money. It's understanding your credit score, how they even calculate it.
And how much it affects everything.
Yeah.
Getting a mortgage, a car, renting an apartment.
Even your insurance rates. A lot of people are just flying blind here, and those mistakes can be really costly.
No kidding. And finally, the fifth big gap, how taxes affect your paycheck.
Taxes.
Right. I mean, really understanding how much money vanishes before it even lands in your bank account.
And why?
And why. And crucially, how you might, legally keep a bit more of it. It's still a mystery for so many people.
It's not just the main tax rate you hear about. It's all the brackets, the deductions, the credits. It's complex stuff.
It really is a beast.
And what's so striking, when you list them out, like at saving, investing, wealth building, credit, taxes, these aren't some obscure niche topics.
Not at all.
They're the absolute bedrock of our daily economic lives. Yet, overwhelmingly, they get treated like these adulting skills.
Yeah, like you're just supposed to magically figure them out.
Right. Through trial and error, usually painful error, not through actual structured education. It's kind of like learning to drive by just jumping onto the freeway.
Yeah, good luck with that.
And the source is pretty clear. This isn't likely an accident. This gap, this lack of education, it seems systematic.
And this is where it gets really interesting, maybe a little uncomfortable, because the source flat out says that's not an accident.
Mm-hmm.
It argues the system isn't broken. It was, in fact, built this way.
That's the core argument, that there are powerful players, entities within the economic system who actually benefit from most people being financially illiterate.
Okay, so let's break that down. Who does the source say benefits?
Well, it points the finger directly first at banks.
Okay, how so?
It says quite explicitly they make billions when people don't understand interest and stay in debt.
Billions.
Yeah, I mean, think about it. Take a credit card, maybe a $2,000 balance, right? And a pretty typical interest rate, say 20% APR.
Okay.
If you only pay the minimum payment each month, it could literally take you over 10 years to pay off.
Over a decade. For $2,000.
Yeah, and in that time, you could end up paying something like an extra $2,500 just in interest.
Wow. More than the original amount.
Exactly. That's a direct result of not fully grasping how compound interest works against you when you're in debt. And that interest, that's pure profit for the banks.
That makes a scary amount of sense. The less you get the fine print, the more you potentially pay.
Right.
Okay, so banks are one. But it mentioned big companies, too.
Right. The source argues that big companies also make money when you keep spending, even if you're broke.
The consumption cycle.
Precisely.
Yeah.
Think about modern marketing. It's incredibly sophisticated, right? They use psychology, targeted ads.
Buy now, pay later.
Exactly. Schemes like that disconnect the pain of paying from the immediate pleasure of getting the thing. Or think about planned obsolescence products designed to break or become outdated quickly.
So you have to upgrade.
You feel like you have to. These tactics work best when consumers aren't really tracking the long-term financial hit of every purchase. It fuels this constant cycle of buying stuff.
Keeping up with the Joneses, but weaponized for profit.
You could say that. It's a powerful psychological game, and it directly benefits the companies selling the goods.
Okay, that makes sense too. Now, the government part. That feels like a pretty bold claim that governments benefit from financial illiteracy. How does the source justify that?
Yeah, that one's a bit more nuanced. The
Yeah.
claim is that governments benefit when people depend on them and don't ask questions.
Depend on them. How?
Well, the idea is if people aren't financially self-sufficient, if they don't really understand complex economic policies, things like inflation, national debt, how tax money is actually used, then they might be less able to push for policies that truly improve their own long-term financial health. A lack of sort of critical financial understanding can lead to just accepting the status quo.
So, less questioning of how things are run.
Potentially. The source suggests it can foster more reliance on government safety nets, rather than promoting widespread financial independence and critical engagement with economic policy. It's about the power balance, really.
Wow, that's a really unsettling picture when you put it all together.
It is.
This idea that the whole setup, how we learn or don't learn, how banks work, how companies sell to us, maybe even how government functions, is potentially designed to keep us, working, spending.
It may be stuck in debt cycles.
Yeah, it completely flips the script. Instead of just, oh, I'm bad with money, it suggests maybe the game itself is tilted.
It really does. And if you take that perspective, it raises a huge question about individual autonomy, doesn't it? Well, if the system's default setting kind of pushes you towards debt and dependency, what does that mean for your actual freedom to make financial choices, your agency?
Right. It forces you to look beyond just your own habits and consider the bigger forces at play. Maybe forces you weren't even aware of.
Exactly. It's a systemic view.
Okay, this is heavy stuff. But here's the crucial part, the reason we're doing this deep dive. The source doesn't just leave us there feeling powerless.
No, absolutely not. It offers a way forward.
It says very clearly, but you don't have to stay stuck. There is a way out.
And the solution proposed is, well, it's straightforward, but also incredibly powerful. It says, increasing your financial education is the way out and really learning how money works.
Education is the key.
Yes, but not just academic knowledge. It's framed as a tool for liberation, a way to actually regain control, to reshape your own financial situation.
Understanding the rules so you can play the game differently.
Exactly. So you stop being played by the game and start playing it to your advantage.
And the good news here is, this isn't about needing some fancy finance degree or becoming a Wall Street guru overnight.
Not at all.
It's about taking intentional steps, consistent learning, empowering yourself piece by piece.
Yeah, totally accessible.
And the source doesn't just say, go learn stuff. It gives 2 really concrete actions, things you can literally start doing today.
Practical steps.
Okay, the first immediate action it recommends is start investing. even with small amounts.
Yes, this directly hits those how to invest and how to build wealth gaps we talked about.
Putting your money to work for you, not just sitting there.
And this busts a huge myth, right? So many people think, oh, investing is for rich people, or I need thousands of dollars to start.
Yeah, I don't have enough capital for that.
But the source specifically says you don't need to be rich to start either. Honestly, even if it's just $50 a month, maybe less.
Really? Even that small?
Absolutely. Put it into something simple like a low-cost index fund, maybe through one of those robo-advisor apps. That starts harnessing the power of compound interest for you.
Instead of against you, like with debt.
Exactly. It's about planting those seeds, building the habit, letting time and consistency do the heavy lifting. The magic isn't really the starting amount, it's the starting and sticking with it.
Where really lowers the barrier to entry, makes it feel achievable. Okay, that's action one. What's the second?
The second immediate action is buy more things that make you money and less that cost you money.
Okay. Unpack that a bit.
It's about a fundamental shift in how you think about spending. Being really intentional.
No, wait. Obviously, we all need to buy stuff. Food, rent, clothes.
Of course, and the source acknowledges that. It says, yes, you will still need to buy things, but be very intentional.
Okay. So it's not about, like, extreme deprivation, eating ramen forever.
No, not necessarily. It's about conscious spending, making choices that actually align with building your financial future, not just satisfying every little want or falling for marketing hype.
I remember buying this gadget once, total impulse buy, just because it was on sale, never used it.
We've all been there. That classic trap, saving money by spending it on something you didn't need.
Totally.
So this point is really about understanding the difference between assets and liabilities.
Okay, define those quickly.
Assets are things that ideally put money in your pocket over time, or at least grow in value. Think maybe stocks, or a rental property, or even investing in a skill that increases your earning power.
Got it. And liabilities.
Liabilities, or things that depreciate, consistently take money out of your pocket. That new car that loses value the second you drive it away, often a liability. Designer stuff bought on credit, liability.
Right.
So by consciously choosing to acquire more assets, even small ones, and fewer liabilities, you start to change the direction money flows in your life.
So instead of always working for money.
Your money starts working for you, even in small ways at first. It's a mindset shift.
And the source suggests that the end result of taking these steps, educating yourself, starting to invest, shifting your spending, is massive. It says, once you stop living paycheck to paycheck, everything changes.
That's the goal, right? That sense of freedom and control.
Yeah, the liberation we talked about.
And ultimately, the source kind of sums it all up with this powerful idea. You just need to know what's going on and take action.
Knowledge plus action.
Exactly. It's a reminder that, yeah, the system might have its biases, its design flaws, whatever you want to call it, but you, the individual, you have the power to understand it. And you have the power to choose a different path, a more empowering one.
That knowledge, combined with actually doing something consistently, that's how you build your own financial system, one that works for you.
Well said.
Okay, so let's just quickly recap the core idea from this deep dive. Financial illiteracy, according to this source, isn't just bad luck or an oversight.
Right. It's presented as possibly a feature, not a bug, of a system that benefits when people are in the dark about money.
And this is the crucial takeaway, you're not stuck. You have the power to change your own story through education and deliberate, consistent action.
Absolutely. And maybe, as a final thought to leave everyone with, something to chew on after this deep dive. Yeah.
If we accept the source's premise for a moment, that the system benefits from our lack of knowledge in those 5 areas: saving, investing, wealth building, credit, taxes.
Okay.
Then ask yourself this: what's one specific habit, maybe even an unconscious one related to spending or saving, that you could adjust starting this week to begin building a financial system that truly benefits you?
That's a great question. A small, concrete change based on this understanding.
Exactly.
It really comes down to understanding the game, doesn't it? So you can play it effectively on your own terms. We really hope this deep dive has given you some valuable tools, maybe a new perspective to do just that.
Hope so too.
Thanks so much for joining us for this conversation.